Welcome to ETF Leaders, powered by New York Stock Exchange. I'm Lara, Crigger, editor of ETF Trends ETF Database, and I am here with Bryon Lake, who's the global head of ETF Solutions for JP Morgan Asset Management. Welcome.
Laura, thank you. It's a pleasure to see you again.
So there are so many things happening in the market right now. What is your biggest focus for the year?
Well, our biggest focus is always two things. One, we're focused on clients, and two, we're focused on being fiduciaries. And I know those are big, kind of statements, but we have an obsession with our clients and understanding what it is that they're doing in their portfolios. And as a leading active manager, we're fiduciaries. So we want to make sure that we're being really thoughtful about what we're doing in the investment space and helping our clients achieve good results. More specifically, what that means in the ETF space is we're looking to deliver and harness some of our best active capabilities and deliver them through the ETF technology. A good example of that is JEPI, our Equity Premium Income ETF. JEPI is the ticker, we call it JEPI. And this is a strategy that owns quality US equities, but then has a covered call element over it as well, which gives you a distributable yield of about 7 to 9%. Which we think is really attractive in this environment, so you can get some good income off of that. The other thing we're focused on is we've been doing some conversions. So we've converted a mutual fund to an ETF. We did the first one this weekend, so it went to bed a mutual fund on Friday and woke up an ETF on Monday. And we've announced to do an additional 3 between now and June. And we also think that's great for investors to have those capabilities, those strategies. This strategy is an inflation managed bond strategy. The ticker, are you ready? JCPI, as in CPI,
okay.
Inflation managed bond. And now it's in the ETF wrapper, so it's intraday liquid, it's transparent, and we actually lowered the expense ratio on the product when we moved it over. So those are two of the things that we're kind of specifically focused on within our ETF business.
Very good. And I know that you're having conversations all the time with investors. What are you hearing from them? What are they concerned about right now?
Well, so there's a lot of uncertainty in the market right now. There's a lot of different moving pieces that investors are concerned about. But a couple of things always remain the same. One, investors are looking for income. There's always investors that are looking for income as the outcome, like we say. And so JEPI is probably a great example of that. Like I mentioned, the 7 to 9% distributable yield. Another example of that is we've got 2 ultra short strategies. So they're fixed income strategies. JPST, ultra short, JMST, which is a municipal version of that. So the tax-free version. And both of those play a big role for investors that maybe have a lot of cash or don't know what to do within their portfolio, and they want to step out of that cash, but get a little bit more yield without taking on too much duration risk. Because as we know, we think the Fed's going to continue to increase rates to kind of tamp down inflation. And so investors are pulling in their duration, but yet they still want to get some of that income. So both of those are great strategies to address that as well.
You mentioned inflation, you mentioned rising rates. I mean, there's so many challenges in the markets right now. How specifically does active management help investors navigate those many challenges?
It's a great question, and here's how I would answer it, is every single security that's in a JP Morgan ETF, there is an investor that intentionally bought that security in the portfolio. They did the research, they understood the balance sheet, they know the company forward and backward. We've got analysts around the world, we've got a significant research budget. We are doing the due diligence on these companies and making sure that we're specifically selecting them to go in the portfolio. So number one, there's a reason that security ends up in the portfolio. Number two, because of active management, the investors are able to change when the market environment changes. And so if it's a fixed income strategy and we're worried about duration, maybe they can pull their duration in. If they're seeing the market on the equity side rotate from one sector to the next, maybe they adapt the portfolio to do that as well. They can adapt when the market changes, and that's a big differentiation versus maybe an index that has a limitation where it can't change. It is what it is, and that's great, and we think both play a big role in portfolios, but active management can adapt real time to help investors achieve those outcomes.
Staying adaptive to the markets is very important. Thank you so much, Bryon, for joining me today. And thank you for joining us. That was ETF Leaders, powered by New York Stock Exchange, and we hope to see you next time.